Good morning, everyone. It is Tuesday, May 17th. I'm Dan Cook with Nadex, filling in for Todd Rich, and joined as always by Brian Caprice. We have quite the day going on in the markets, and in some ways, kind of confounding. I mean, dollar's getting smoked, indices commodities are climbing. Yet when we look at dollar yen, they're flat. VIX is really not it's not changed. So we're going to get to what's going on with all of this in just a moment. Uh, Before we begin, though, and today's probably a great day for one of these risk disclosures. Trading involves risk. We're going to be looking at key levels, market movements. Please understand, we're doing this for educational purposes. Please don't take anything we say and just say, hey, I'm in on that. So definitely understand that. Make your own trading decisions. This is here to educate. Look at how Brian analyzes the markets, which is, if you've been following for a while, you understand those levels are awesome. But definitely understand nothing is a sure thing. We're in very uncertain times here. And just really understand, if you are trading, it is all about using only risk capital, not things earmarked for groceries or mortgages. And give me 1 second, Brian, and I'm going to turn it over to you to help us figure out what the heck is going on here today.
Yeah, I wish I had an answer for you.
Spot there. Yeah. Yeah.
Yeah, I wish I had an answer for you, but what it seems like to me is, so we know that Powell is speaking at 2:00 today. We knew Bullard actually, we knew he was going to come in with comments. It almost feels like somebody knew what they were going to say ahead of time. It's again, absolutely massive movements in currencies. We mentioned this December. We basically talked about 2022 would be the year of the currency. Everything, massive amounts would rush back in with all the interest rate rises and inflation and everything. We didn't even know there was going to be war at that time. But these are the type of days where you look at it, you're like, wow, that's a lot of movement. And then again, this is where, particularly with the pound yen, 324 pips is an absolutely massive amount of movement. It's over 2 times its daily ATR. Imagine, and this is where, again, currencies can kind of get a bad name, and they have in the past, where people are like, wow, look at that. They call it the Widowmaker. And this is why, when people trade with no stop losses, imagine being short the pound yen, because you've seen it lately where the pound has kind of gotten beaten up. And I even said, I've kind of had to pull back a little bit because they have some problems. Their CPI tomorrow is supposed to be 9.1, even after 4 raises, and they're having problems with the economy. And then all of a sudden, 1 day later, it's up 326 pips. And when people don't know what they're doing, they'll put a short position on there and then never put a stop loss because, stop losses are bad, right? And then this is what happens. And then, boom, their account goes pop. So, again, massive amounts of movement. And typically you can find a reason for it. It's a very curious day right now. I mean, you're seeing the pound yen up 324. You're seeing the pound dollar up 234. You're seeing the euro up 122. Again, just a little bit above an ATR. The dollar yen, 15. Right? Aussie dollar up 100. Dollar CAD down 100. Dollar Swiss, which we've been like, go long, down 129. I mean, nothing great is for the Swiss right now, but the dollar is just getting obliterated. The VIX, you can say, hey, it's down 2.7% today. It is, but it kind of gapped down once the market reopened and then hasn't moved at all in the overnight. It's been completely flat. So, yes, lower than where we closed yesterday, but there's no major movement. There wasn't any weapons fired. There wasn't, the U.S. is not at war now. There's nothing. No volatility on the VIX. The indices are going absolutely nuts. They're already at 1.7% today. The dollar, it's like somebody hit a switch at like 1 o'clock this morning. Between 12 and 1 o'clock, the dollar's value just started to deteriorate. I don't know if somebody's selling something or, again, looking at headlines, you can go back and say, okay, what is the latest, or the hottest news stories, right? Give me the hottest stories and look back, in 8 hours ago. I mean, Japanese regional banks post, 20-point profit growth. Okay, that's good for them. Canada was talking about the housing market. The U.S. dollar knocked a 20-year high. Okay, obviously that's not happening right now. And then some Chinese data, and that's it. There's nothing really out there. I mean, there's something from Bullard just about 15 minutes ago, but all this started late night, and there's really no news out there justifying this type of move. So whenever you see things like this is kind of like, well, wait a second, did somebody have some information out there? Answer is probably. There's no other way to really justify it because this is way too much movement at literally when no market was open. The Asian session was the only one open that could start moving this. And again, looking at some of the big ones out there, I mean, looking like the pound yen really, I mean, you see where the takeoff point was? It was about 2 o'clock. 2 o'clock at base. We talked about 160 being a big deal. Yesterday, we talked about a level. And again, this level had been hit 3 times, 1, 2, and 3. It came up and based in 4. And that's typically where we're like, oh, is it time to go long? We mentioned a bit of a racetrack in there. And as you can see, it came up and it actually hit and actually bounced off the first line and is actually kind of trying to get to the second line right now. So how do you play this? I would say start looking for reversals. This is way too far out. Actually, a fun way to look at this would be to look at Bollinger Bands. You can see how compressed they were, right? If you look top to bottom here in the Bollinger Bands of what this looked like before the move, that's how wide the bands were, okay? Now, if you look at the bands, that's what it looks like right now. So obviously, there's a huge breakout, and typically after you see that explosion, we start to see a contraction, and again, a lot of reversal. So I would say, at least in pound yen today, be looking for some reversals, look for some confirmations. We are finding 2 areas there will be some profit taking. Pound dollar, kind of the same thing. I mean, this one is even more. In the Bollinger Band presentation I did for the last education summit, we talked about that squeeze, right? One of the Bollinger Band strategies is look for the squeeze, because then whenever it squeezes, that's where you're looking for the breakout. Here's the squeeze. Look at this one. This is even more crazy. Look how little that is, and now look at the current width of it right now. Look at the difference between those two, right?
It's like a 5 or 6x.
Yeah, it's unbelievable how many times more that is. So again, huge movement in that one, and it doesn't matter. Aussie yen, you're seeing it again, continued to rise. Euro yen started to expand. Didn't have the same, as small basing, but again, took off, right? But then all of a sudden you look at the dollar yen, and what is it doing? We're in the squeeze right now. Look at that. We are actually, if you look right now, what the current is versus what it looked like even just at 1 o'clock this morning when everything else took off. There's your 1 o'clock. Look at the difference between these two, right? So again, it is a battle right now between weak dollar, right? Because right now you would assume, hey, listen, dollar's getting obliterated. The pound, they just, or the yen, they just posted some profits. Everything else, this thing should be down all the way over here, right? It should be pushed back down to 127, but it's not. It's holding. So it's a battle of weak. And again, the battle of week right here, seeing that weak yen, you end up seeing the U.S. stock market up. Now, what's weird about this is a complete risk-on type scenario. This is not even risk-on. This is a weak dollar type scenario. This is a weak Fed type scenario. Why? All the indices are up. Again, we know that inflation is bad. Biden has said it's our #1 domestic problem right now, which I think that's... He's changed that he's changed that around a couple different ways. He changed the terminology around, but his first thing was this is our biggest domestic policy right now, which again, I don't know that I fully agree with that, but that's what he said. Those are his words, and then he changed it. If they are not raising interest rates, that's awesome for the stock market. It's up. It's not like commodities have helped us out. Crude oil right now, up at 114. We're sitting back at a high. Actually, let me get the Bollingers now, so it gets off. We've pushed above. Yesterday I talked about breaking through 111.68, and it was go time. It did that at about 11:30. We went up and then kind of maintained. It's not like oil has dropped down by 20 cents, and all of a sudden it's like, yes, we can all afford to pay for gas again. No, it's even higher right now. And I can tell you right now, locally, my gas prices from yesterday to today have already gone up 10 cents. So it's moving. Natural gas must have went down. Nope. Natural gas literally pulled back right below the 23.6 from where we talked about, and we mentioned that, hey, listen, we have some potential selling, and it made it up, and it's fighting. It's battling right now, but we are up in, actually this morning, we were up to $8.34. So, for this one, is this reversal time? I probably wouldn't play reversal on this one because, again, this is grinding back up. If we were sitting back up at that $9 mark, then I would say maybe. But right now, it's punching through all the sellers that existed, and again, right here at the 78, which is when we'll officially get rid of this, there was enough basing in here, and it has turned price away. So that's kind of what we're dealing with right now is this little level right here. Not really ready to reverse it yet because even if everything kind of switches and the dollar gets weak or whatever, the rest of the situation is going higher. That's getting worse. Now, gold, as we've seen, gold has been absolutely awesome to continue to short because why? Raising interest rate environment, we need to crush inflation down again. And all of a sudden, gold is now up 0.5% as well as silver. Why are they rallying back again? It came back to the 23.6 again. 1, 2, 3 touches here. It based at 4, tells us it's going to break, and it did. It broke and is now going higher. And really, until the 50, there's not really tons and tons of sellers in there until it goes higher. Why is gold going higher? Is inflation coming back? Well, some of these headlines, things like Bullard right here, mentioning things like, hey, you know what? 50 base increase is coming at the next meeting, and it's a good base for now. Remember, he was the one going, we need to go 0.75. We need to get this under control. And now, finally, he's starting to pull back a little bit. And that's kind of a scary type type situation. Now, this is kind of what I'm wondering is if this is the data that people saw early. Retail sales did come out a little while ago. The core sales, meaning the products minus, basically energy, fuel, and food, that number actually wasn't as bad as what they expected. And again, it was a double-double. What I mean by double-double, last time they said it was a 1.1, it was actually a 2.1, so they missed. They were wrong. They adjusted it higher. And then, again, this actually should have been a bad number because remember, when they're following the trajectory, it's kind of like, oh, this is where it should be, right? Well, if they missed the one, the higher, it's starting higher anyway. So to stay on track, it should have been lower. It actually went even higher than what the projection was. So a double-double is great, but then they're looking at overall retail sales. And yes, although it did adjust, it adjusted by a large amount, it is a red number. So people may look at this and say, listen, we're still spending, right? We're still spending. So it's okay, but this is a red number. It's obviously down, so it's having an effect. So maybe we shouldn't be as aggressive raising interest rates. Kind of hard case there because it was such a big jump last time. But again, that's the only bit of news. And then Powell was speaking at 2 o'clock today about inflation. So with Bullard kind of taking, cooling his heels a little bit, maybe something that Powell is saying, there is literally nothing else out there that we have that would justify the movements that we had. So it's kind of like some type of data, something has slipped, something is out. Now it's time to start playing the reversal because a lot of people are going to see these and say, hey, listen, this thing is spiking. I need to get long, missing out on this opportunity. And that's where we tend to get reversals. But it's not like oil's helping us. It's not like gold's helping us. It's not like natural gas is helping us. The dollar is collapsing very, very fast. And it's not like they just said, we're not raising interest rates anymore. There's nothing that really brings weak dollar in. Even looking at the cryptos, they are coming back a little bit. They're not really, I would say they're not bucking the trend on that one. And then bonds are down a little bit today because, again, it is more of a risk back on. And bonds are not considered necessarily a risk back on again, but they're not really, again, they're not moving too much, right, for what we've seen. So, I would say the name of the game today is really how do we look for the top of these and then look for true reversals out there in the market. Twitter, I'm expecting there's going to be a lot more movement in Twitter. I guess there was a comment made that actually it's Tesla would be the one that has the big mover today. I guess Elon made a comment that he's like, oh, I'm getting in trouble for talking about my concerns. Then maybe I just won't buy Twitter at all. And was supposedly providing a big pop in Tesla. And again, we're seeing a bit of a gap. It may actually happen a little bit more. But even Apple is gapping higher. So everything is risk back on. And again, it is that Apple is rising. Beijing is locking down more people, which again, Chinese profits are big for Apple. It's interesting that they're mentioning this. They're like, hey, listen, we got this zero COVID policy, zero COVID fight. They're extending the lockdown, and it's not a full lockdown in Beijing. But they're mentioning that these added restrictions are coming as Shanghai is actually starting to ease and slowly open up back up again. So that's kind of again, that should be driving oil prices more. And we are seeing that. That's the only thing right now that really truly makes sense in the market. ECB has also said that, hey, listen, 25 basis point hike is probably realistic. 50 can't be excluded if the data come in the next 2 months says that it's getting even worse. But remember, the UK is already on this 25 hike. 5 months in a row, and it's not working for them.
I thought the comments actually yesterday were kind of funny. They're not funny, but apocalyptic food prices out of the UK. He actually feels helpless to do anything about it. And then you've got the ECB and Europe over here kind of going, oh, you know what? We'll see what happens. Which is not too different from what happened in 2008, 2009. Where the Fed and Bank of England were really aggressive in that race to zero, quantitative easing, get in there. And ECB was really late to the game in that. That was Trichet was the president of ECB at the time. And I still remember thinking, what are you doing? And one of the funny things, when they did come out with their version of quantitative easing, they totally denied that it was quantitative easing.
Yeah, they said we're not using that name. That's not what it is.
Yeah, it was something like enhanced market operations. And all of the reporters kept asking, well, isn't that quantitative easing? No, it's enhanced market operations. And it was just, so I don't know if we're in that same, clearly a totally different situation, different drivers, but a lot of the same attitudes in how the US and UK are reacting compared to Europe.
Yeah. And and again, talking about the food prices is definitely a problem. They said they're helpless with it. Also remember yesterday, and I don't think it was out yet for here, India has now banned exports of grain. So Europe, the ECB has basically said, hey, you know what? we're blocking all Russian goods. Forget Russia. Well, Russia produces a lot of the grains. The Ukraine fields have already been destroyed, so we can't get seeds, fertilizer, or grain from them. China has signed basically almost at this point an exclusive agreement with Russia to take all the grain that they were going to have. And India just said, oh, by the way, because of the problems there, we want to make sure our population has it. We're banning the export of grains. So food shortage. So, it's coming. It's, this is one of those things that, again, it's coming back to bite a lot of the EU saying, hey, listen, forget Russia. Instead of meeting on kind of a diplomatic front, it's like, forget it. We're going to go anti-Russia. And now other countries that have been not as anti-Russia are saying, well, hey, listen, they got a lot of resources. We can't ship all our resources to you. Our population needs to eat. You're seeing people around the world kind of rally back again and being like, hey, listen, I know, what you're trying to do, but the avenue that you took is not necessarily the best. So, again, food shortages and inflation, it's a very, very hard game. But again, the food prices in the UK are definitely a big deal. Again, going into tomorrow, this is going to be a huge. Oops, I have it just set on US. Let me set all. This number here tomorrow morning at 2 a.m. 9.1% year-over-year consumer price index. That is absolutely huge. It's a gigantic number. There's not much else to say about it. That's why you're seeing the euro pound down 70 points because, again, people are looking at this number and saying, hey, listen, you've done 5 months worth of 0.25 raises, and your year-over-year is still 9.1, and your mandate is 2. So, and again, and what are we seeing? Additional food shortages, issues with more Russian problems with, supply and things like that. So again, the ingredients for higher inflation are there. The only method to use to fight it thus far is not necessarily working. So we're seeing movement. And again, here's another comment by Bullard. The Fed is not as far behind the curve, judged by market pricing. And again, I love this. Increases the market rates for treasuries. Home mortgages show that the Fed is not as far behind. Yeah, everybody loves 5% home mortgages. This is where one of those things. We made this comment. I thought it was great, and we'll end on this today. Somebody, I forget what program I was listening to. Somebody made a comment that everybody in the world, not everybody because I disagree with the statement, but they say that, people can't time the market. So why do we think that the Fed can time interest rates? And I thought it was a great statement. A statement like this from Bullard, who I respect tremendously. The Fed is not as far behind the curve as judged by the market pricing. The market has more money. It's nice that the Fed thinks that they can control everything, but at the end of the day, it's the market and the public that actually control it. Big money controls it. The Fed trying to judge it and play kind of catch up for things will never be as fast as the market. And this is why the market is always right. The market is not wrong. What people do with their money, how they spend it, where they spend it, what they invest in will always go farther. The Fed can kind of control it. But when you think that you are more powerful than the masses, that's where you run into problems. And again, things like making comments about how interest rates and market treasuries, home mortgages show that the Fed is not far behind. We've done 2 raises. We just started the raises. The Fed is in agreement. We're going to raise till 2023. We have another 3, 4, 5 maybe raises depending on how much they do. With that being said, we've gone from a 2.8 all the way up to a 5.1. They're already talking about 6 and maybe 7% home mortgage interest rates. Wait to see what that does for the boomer not the boomers, the millennial generation when they're out there trying to buy new homes. There's no reason to do it. They're going to look at renting, and the housing market could potentially crash from it, particularly with inflation costs as much as they are. Why take a mortgage when you can rent? So, yeah, this is the thing, guys. Don't battle the market. Do what the market is showing you, and again, play against the masses is the way to do it. But dangerous comments there from Bullard.
Yeah, absolutely. It's almost like we're adding some verses to an REM song. Maybe half our listeners don't remember, REM, but maybe tomorrow we'll come back with birds and snakes and airplanes.
Yeah.
With that, we will wrap it up. I just want to remind everybody that we've got a crazy day in the market. And in case that wasn't made crystal clear, let me just reiterate: the market is really running hot and crazy today. Yeah. So definitely take care of your risk.
And we'll be back in 3 hours. Don't forget.
Oh yeah. You know what? Yeah. Thank you for reminding me.
We'll have a whole lot more headlines. Yeah.
A whole lot more headlines. So come back, catch us in a few hours, and Todd's going to kill me. I forgot to post the link. If you go to Nadex.com, the Education Center, you'll find the link there for today's webinar where Brian will be going through a full hour of his analysis on the markets. With that, hope you all have a great day. And as Brian said, take care of your risk. Remember those. If you're trading futures, anything leveraged, definitely remember your stop orders. It just destroys accounts if you don't have them. So with that, I hope everybody has a great day. Thanks, Brian.